Hi guys, welcome to this week's Intrinsic Value Market Update. So for this week's market update, we'll be focusing on consumer related companies. And the companies in this week's market update are Tesla, McDonald's, Nike, Walmart, StarBucks and Procter & Gamble. So before we start, here's a quick disclaimer. Alright, let's get into the video. Our first stock will be the company of the richest man in the world, Lord Elon, which is Tesla. So Tesla has recently skyrocketed to past $1 billion in market cap due to their stellar earnings as well as the signing of key deals with companies Hertz. Looking at Tesla stock, for Tesla it is a very high growth company currently, so I've used more aggressive growth rates. So I've used the growth rates of 45%, 30% and 20% here for Tesla stock, and with a rather conservative discount rate of only 9%, the maximum intrinsic value I can actually generate is only $613. So currently they're trading at about $927, and that is about a 50% premium to their intrinsic share price. And as a result, we can see that Tesla is actually very overvalued currently, and this is because of their future potential and future promise. And that's why if you are going to invest in Tesla, you need to be willing to pay a premium for the stock. Looking at Tesla's chart, we can actually see that there is an area of resistance, previous resistance at this level of about $885, which might become an area of support for the price action down here. So there's also a confluence of the 200 EMA, which is this yellow line, where the stock price has used an area of support previously as well, once, twice and three times. So if we project this forward and look at these two lines moving forward in, let's say, the next couple of weeks, it looks pretty likely that this 200 EMA might meet this black line here, this area of value, and that might be where we can find a potential bounce for the stock price of Tesla. But we also got to remember that Tesla is massively overvalued at over 50% premium. So this stock price technically can collapse all the way down, and it will still be rational, in line with its fundamental value. So if you're looking to invest in Tesla, a decent entry point would be, as I said, in about 2 weeks time, where the stock price comes down and retraces to this 200 EMA, meeting this horizontal area of value down here. That might be a potential entry point for you. Our second stock for today's market update is McDonald's, everyone's favorite fast food chain. Founded in 1940, they have currently built a global brand that has adapted their products to various markets all over the world. Looking at McDonald's free cash flow projection, it is actually a very mature company, and so I've used more conservative growth rates of only 10%, 8% and 6%, and with a discount rate of 4%, the intrinsic share value that I've generated is about $236. However, at their last close price, which is what they're currently trading at, of about $265, it is still a 12.5% premium to their intrinsic share value currently. Looking at McDonald's technical analysis, we can see that there's been an horizontal area of value here, which was a previous resistance level at about $256, where the stock price found resistance twice previously, but eventually broke through it in the past couple of weeks. So the price is currently quite overstretched from the moving averages currently. So it would not be a very good time to add shares or start investing into McDonald's if you are intending to start a position in the stock. So what you would like to do is to wait for the stock to retrace down to an area of value. So a potential area of value that I've identified is this 100 EMA, this orange line where you can see the stock price has found previously support once, twice and three times. So when the stock price retraces to around this 100 EMA line in the future, that might be a good entry point for you to enter into McDonald's. Moving on to our third stock in our market update, it is Nike. So Nike is currently the world's largest supplier and manufacturer of athletic shoes, sportswear and equipment. For Nike's free cash flow projection, as it is a company that is still growing relatively stably, I've used actually growth rates of 16%, 10% and 8% currently. So this generates a financial share value of about $136 with a 6.6 discount rate that I used. So currently the stock price is trading at about $162.72. So that's actually about a 20% premium on their current share price. For Nike's chart, we can see that a previous area of resistance at about $146, where it has found resistance once, twice, 3 times and 4 times, has now become an area of support for the price action here. So there's another resistance level that has just formed at $174, where the stock price found resistance 3 times currently and is making a retracement currently. So looking at the Nike chart, we're trying to find an area of value where we can potentially add shares or start a position in the stock. So we can look at this 200 EMA, this yellow line, where the stock price has found support once, twice, 3 times and 4 times currently. So currently Nike is in like no man's land. So what you want to do is wait for the price to retrace to an area of value. So the first area of value will be this 200 EMA as I highlighted down here. So you can potentially look to add shares at about $156. Or if there's a deeper retracement, you can look to add at this horizontal level of support where the stock price has found support previously at about $146. The fourth stock that we'll be looking at today is Walmart. Focusing on their everyday low price strategy, they have been able to build an empire for themselves. Looking at Walmart's free cash flow projection, as another mature company, I actually use more conservative growth rates again of 8%, 5% and 3%. So combined together with a discount rate of about 3.9%, I generated an intrinsic value of about $160. And currently trading at $143, this is about a 10% discount from their intrinsic share price. Looking at Walmart's chart, we can see that it is currently in a range market, as we can see the moving averages chopping across the stock price candles. So the resistance level for the range is currently at about $150, as we can see here once, twice and 3 times. And the support level for this range market is about $136. Stock price has bounced off once, twice, 3 times and 4 times. So currently if we look at the stock price at about $141.50, it's currently in no man's land. It's in the middle of the range. So this is where you do not want to enter because you are not sure if the stock price will continue going up or continue going down. So what you like to do if you want to start a position in Walmart is to wait for the price to retrace to this area of support down here at $136, and you can potentially look to add shares there. Our second to last stock for this week's market update is Starbucks. Starbucks is currently the world's largest coffee house chain with over 30,000 stores in over 80 countries, with more than half of that being in the US. Looking at Starbucks cash flow projection, I've used growth rates of 10%, 8% and 5%. So combining this with a discount rate of about 6%, I've generated an intrinsic share value of about $87. So currently Starbucks is trading at about $109, and this is actually at about a 25% premium to their intrinsic share price. So Starbucks is actually really quite overvalued right now. Looking at Starbucks chart, we can also see that it is in a form of a range market, as we see the moving averages also chopping across the price action. However, there's a strong level of support at the $190 mark, where the stock price has found support once, twice, 3 times and 4 times previously. However, if we take a deeper look at the stock itself, we can see there's like a form of a descending triangle chart pattern forming on this chart. So what this means is that there's increasing sellers earlier during the rally after a retracement every single time. So basically at this first point, sellers are beginning to sell at $120. Then sellers are beginning to sell at $117.50. And now sellers are beginning to sell at $115. And these are all going into the same area of support. So you can imagine this as someone consistently banging on your door in decreasing intervals, and this leads to a build-up of pressure which will eventually lead to a breakthrough in the support level. So I personally wouldn't be surprised if Starbucks actually breaks through the support level and continues moving downwards, especially given the fact that we mentioned earlier that Starbucks is trading at a 25% premium from their intrinsic share price. Our last stock for this week's market update is Procter & Gamble. Procter & Gamble is one of the world's largest companies that competes in the consumer goods industry, and they specialize in FMCG. Looking at Procter & Gamble's free cash flow projection, they are a company that competes on a low margin business and compete on tight margins. So I've used growth rates of 8%, 6% and 4%, and with a discount rate of about 4.2%, I generated an intrinsic share value of about $146. And currently they're trading at $159.50, which is actually a 9% premium to their current share price. looking at Procter & Gamble's chart, we can see that the stock price has massively shot up over the past few days and is making an insane rally. So it is actually not very smart to add shares at this point, as it is very overstretched from the moving averages. So actually what we can look at is to wait for PG to drop to an area of value where we can potentially add shares. So this area of value I've identified is at this 200 EMA here, this yellow line, where the stock price has found support once, twice, 3 times and 4 times. So it is way overstretched and it's a very far distance from this 200 EMA currently. But if you want to add shares into Procter & Gamble, you got to get a good deal, especially because it's slightly overvalued. So you want to wait for the stock price to retrace to this 200 EMA before you even consider adding any shares. And that's all the stock we have for this week's market update. Hope you like those that we have chosen, and here's a quick summary table of all the stocks we've mentioned in this video. Do let us know what you'd like to see for next week's market update, and as always, please like, share and subscribe to our YouTube channel, and may the markets be in your favour, and I'll catch you in the next one.